All right, well, I'm gonna go ahead and get started, even though I know people are gonna my screen's gonna keep moving as more people jump in and on realtor times, which means sometime between now and 10:35, we'll have double the people. But let's get going. Tom is on a schedule today. He's got an appointment just after 11, so he's got to get moving. I want to discuss with you guys today lots of things that we've been talking about, and you guys have been talking to me about. Some of you in here have been asking these exact things. Construction perm loans. Tom's going to talk about that. Sorry, guys. I want to introduce Tom. Tom Weinard, WaterStone Mortgage. A lot of you guys have open forums before. He has sponsored many events with us. He doubles as my brother-in-law, and he's a great guy. So Tom is here. Construction perm loans. When your appraisals come in low, a lot of you guys have been having this. Tom's got some stuff for you on this. And pre-underwritten approvals, which you guys can probably figure out the benefit of that in a multiple offer situation, but Tom's going to discuss that as well. And then, of course, we'll discuss anything you guys want to discuss, like our normal open forum. But I'm going to go ahead and turn the floor over to Tom. Tom, thank you for coming in, and we look forward to hearing from you.
Thanks, Ryan. I hope you guys don't hold that brother-in-law thing against me. Ryan is my second favorite brother-in-law, so.
That's pretty good.
Good to see you guys and be with you this morning. We'll start with the construction loan since Ryan mentioned that first. Anybody done a construction loan with a client before? Just gonna raise your hand or whatever. Good, okay. So obviously right now, you all are in a position where you are making multiple offers with almost every one of your clients. You know, I have so many people that are pre-approved that have made 6, 8, 10 offers, not getting accepted, always getting beat out. And it's for a variety of reasons. You know, we never know a seller's motivation. We find out during the negotiation. But an alternative that I've had several clients look into, because what's the next best alternative to buying a resale home is going new construction if there isn't any inventory, right? So you can always go new construction, work with a Lennar or a KB, get your client in there. But I'm hearing that those guys are way behind. Those homes are taking a really long time. So if somebody's going to commit to saying, look, I'm frustrated that I can't get my offer accepted to move into a house in 30 or 60 days, maybe I'll build a house. Okay. So the construction perm loan is a good product for someone who's just wanting to say, or anybody who just wants to build what they want to build, right? I've had a couple clients that say, I would never buy a resale house, but I want to live in something somebody else has lived in. Okay, that's a little extreme, but it happens, okay? So the construction loan is a good option. Now, as a realtor, it isn't necessarily as beneficial to you because the only sale you are making is the lot. However, I've done several construction loans with lots from $100,000 to $400,000. So there's certainly money out there to be had in doing a construction loan if your client is at a point where they're just frustrated. So it's something to keep in mind. It's very simple in terms of the process. The number one thing I would tell the client to do is find a builder they want to work with. And there's two reasons for that. There are a lot of steps that have to be taken to protect the client by verifying and validating that builder. We go through a builder approval process. It's not ridiculous. We don't ask for blood samples. We just want to do some background checks. We want to do some reference checks. We want to make sure they're an experienced builder. You know, if somebody's built one house in their life, we're probably not going to approve them. But we want someone who's going to be a good person for the client to work with. Once they've chosen the builder, now you have to find out, will that builder acquire the lot for the customer, or does the customer need to acquire the lot ahead of time? So those are the two different ways to get started on a construction loan. Ideally, it's nicer for the consumer and nicer for everyone if it's wrapped into the construction contract. The builder says, hey, you want to buy 123 Elm Street over here, it's a half-acre lot. I'll add that to the contract price for 50 grand, 80 grand, whatever it is. As a realtor, you'll get paid the commission on that lot. And then the construction cost gets added to that. And then I start working with the client on approving them for, again, let's say a $50,000 lot and a $200,000 build. It's essentially the same process for the client as buying a $250,000 house. I get the same documents. I go through the same processing and underwriting. There's just that extra step of getting the builder approved and closing the loan. The reason I say it's very similar is because our construction loan is called a one-time close. Okay. Anybody who's done a construction loan knows that there's always a modification period or a second closing, depending on what type of construction loan it is. The advantage to the one-time close is everything's done up front for the client. They're putting their down payment down. They're getting the loan amount set up that they want. We're locking the interest rate up to a year in advance. And when it comes to the end, the only money they'll bring to the modification is their escrow money, setting up their insurance and their insurance and tax escrows. At that point, they could also buy their rate down. If rates have gone up, they're locked. But if rates have gone down, we actually work really well with the client and we're very flexible with that. The last one I did, the client locked really high because it was a year and a half ago. Rates were a point lower. We just dropped his rate. Okay, but at the modification, that client brings a little more money for the escrow. If they want to put more down payment down, they can. Some people are selling a house, and so they're not going to sell it, of course, during the construction period. They're going to wait till really close to the end. If it closes before, then they have those funds they want to put down. They have the option to do that. And then they start their, just like if they bought the house completed, start making their payment a month and a half later and rock and roll. Questions on that? Okay. Anybody think that sounds like a good idea?
I have a question.
Sure.
So if the buyer purchases the lot first,
Yes.
having the builder purchase it for them, that means they're going to have two different closing costs for the lot when they purchase it, and
Yes.
then costs for when they close the perm loan, rather than if
Yes.
the company purchase everything for them, they only have one closing.
Yes, and thank you for bringing that up because that is the second way to acquire the lot. I should have mentioned that. So if the builder, and there are builders who don't want to acquire the lot as part of the contract. I've done a couple where the builders is like, we just don't do that. We want the customer to have the lot themselves, cash for it, or finance it. We don't finance lots. That's actually, when people ask me at WaterStone, what can you do? I can do everything except finance a lot. I can do anything else you can think of as a residential loan. I have almost no limitations on what we can do at WaterStone. However, we just don't finance lots. Small community banks, best place to go. So the client can finance the lot, and the closing costs are pretty low. It's not much on a lot. They do have to put down 20 to 40%, typically depending on the bank. There might be some now, but once they do that and they own it, whatever they put down on it is equity in that property. So that's already a down payment they've put down that can be applied when we go to close up front. Okay. So yes, there might be a little bit of extra closing costs, but I've had a lot of clients that weren't ready to build now. So they found a lot they wanted and bought it, and held on to it for 3 months, 6 months, a year before they built. That way they can pay the loan down, the value goes up, they gain more equity over time. So there's certainly pluses to doing that as well. It is just an extra step. And technically, when we do the construction loan, it's a refi because we're paying the lot loan off. But either way, that cost is going to be included in the construction loan, whether they acquire it up front or the builder acquires it for them. Good question.
I have a question. So did you just say you do not finance lots, correct?
Correct. Correct.
Okay. So you just said also that they could pay their loan off on the lot. So where did they get, they went to another bank and got a loan on the lot?
Yeah. So again, most small community banks, in a local area, I used to reference TD Bank because they were small. They're not that small anymore. But Ryan, in Claremont, there's a bank or two out there that we know, and I can't think of the name of them.
Seacoast does it. There's a bunch, guys. As you guys know from my personal stories, I acquired a lot, and I used Iberia Bank. There's all kinds of different lenders and stuff.
Your small local community banks are really almost always the best option for that. Credit union maybe, but I'm not a big fan of credit unions for a lot of reasons, just some of the restrictions they put on things. But
so are you saying they purchase the lot, get financed with another lender,
Yep.
But when they want to build the home, you would do a construction loan and pay that lot off for them as
Exactly.
part of the
So
loan.
let's take the example of buying a $100,000 lot. You put 20% down, you have an $80,000 loan. Your construction cost is $200,000. We do a $280,000 construction loan to pay all that off, right?
Okay.
Adding the construction cost and the payoff of the lot, correct? And conversely, if the builder says I'll acquire it, then the buyer is doing a $200,000 contract with a $100,000 lot added to it. So now they have to finance 300,000 or go ahead and put that 20 grand down and make it the same as if they bought the lot before. Does that make sense?
Yeah, so you're saying they could, are you saying they could buy the lot at the same time they want to do the construction loan as long as they had 20% down on the lot?
They just, only if the builder is going to acquire the lot. It's
Oh,
either
okay,
says, I'll acquire the lot for you. When you find the lot, I'll buy it and add it to your contract. If the buyer wants to buy their lot ahead of time and wait, then they go finance that with a community bank.
okay. But it wouldn't take that long if they bought a lot, financed it. They could potentially start the next month on construction.
Absolutely.
Yeah.
You could pay off a lot loan in a month or two.
Yeah,
It doesn't usually work that fast. Most
yeah,
buy a lot up front, hold on to it for a little while, or maybe they find a lot. I've had people call me and say, I own a lot. I'm doing one right now. The guy has owned the lot for over a year. He paid cash for it. So that's instant equity. It's 50 grand. It wasn't very much. It's a small lot, but that's equity right there. So he almost has to bring no down payment to closing to have the loan he wants.
so I have a guy right now that's been looking, because he wanted kind of a newer construction home and he doesn't want an HOA. So how would you know, and he probably could pay cash up to 100,000 for the lot. Is there any way they could overpay on that lot to where the house they're going to purchase the numbers don't work? I'm just
No,
throwing that out there.
and anyone who can pay cash for something is probably a good idea on the lot, because then you don't have anything to pay off. You just have equity. And you,
Okay,
if they can afford to do that, that would be best. Yes.
okay,
You know, if somebody wants to put 50% down on the lot, again, that's $50,000 in equity and only 50 grand
and then
added.
they can finance 50% when they do their construction.
Yeah.
loan. Yeah, okay, that's good information.
And a lot of these local banks, guys, they want you to build within a certain time period. They're not in the business of just letting the money sit out there. So they want to build and turn that money over. So a lot of them give you like a 1-year window or something like that to build. To
Yeah.
at least begin construction and get Tom to buy them out.
Yeah, because that lot loan is paid off up front. So we usually close construction loans in 45 days. So let's say I've got a client, they find a lot, they go buy it. They start working to find a builder because they just hadn't had time to do that yet, or just the lot, you know, when the right lot pops up, you want to buy it, right? So if that person decides 2-3 months later, they pick their builder, we're going to close as soon as we get that builder approved. We're going to set a closing date about 45 days from there. So a lot of times those lots are getting paid off in 2 to 6 months, most of the time. Anything else on that topic?
How would you determine the down payment for the construction loan?
We can do up to 95% financing up to $1 million. So just like any other loan, if I have a client who wanted to buy $1 million home and put 5% down, I technically can't do that on a resale. I have to do it. Well, I take that back. I could do it through the bank. Just so you know, WaterStone Mortgage is a subsidiary of WaterStone Bank. So we also have bank portfolio products. What's good about that is it allows us to not just do the traditional Fannie, Freddie, FHA, VA, but we have bank portfolio products that allow people to do loans less than the 3 or 4 years required for foreclosures and bankruptcies, which is really cool. And then they also do the jumbo construction. So in case people don't know, over a $548,000, $250,000 loan is a jumbo loan. So there are different options for that. I'm sorry, your question was about down payment and equity.
Yeah, so how much, like if a client asks me, how much do I need to put down
Right,
for
okay,
the construction loan? Like, how do we calculate that?
Yes. So again, someone can put as little as 5% down. So again, you buy $100,000 lot, you build $200,000. That's a $300,000 total cost. You can put 5% down, 15 grand, boom, you're done. You're ready to go. Obviously, you guys know, I'm sure most of you know, any conventional loan over 80% has PMI. We can do FHA construction loans. I think we can do VA construction loans now. So we have a lot of flexibility when it comes to that. But again, it's a 5% minimum. They can always put down more. It's really what the customer wants and frankly, what they're qualified for. You know, the big thing is, and I'll tell you this when we talk about the platinum pre-approval and the appraisal stuff, is you guys really need to do yourselves a favor and get your clients pre-approved upfront. And I know that sounds really simple. And for most of you are like, well, duh, we all do that. But I know there are people on this call that have taken clients out to look at houses that are not pre-approved. Yes? Anybody want to admit to that? Go ahead. You all did it, right? I know everybody's.
I'll admit for them, Tom, because I hear them cry to me about it.
Yeah. And is Max on the call? Can I pick on Max? Maybe.
No, she's not here. Go ahead.
Not on the call. I'm not going to pick on her. Max is awesome. We've done a lot of deals together, but so I've had many calls from realtors saying, hey, Tom, I just took this client out for the last 2 weeks and looked at a bunch of houses and they found one they want to make an offer on and they want to make the offer tonight. Can you pre-approve it? Can you pre-approve them now? And when do you think you call me on that? Sunday around 4 o'clock, right? So you put yourself and the client in a really tough position because the client probably talked to you, and especially if it's somebody you know, you get a little bit more relaxed and you're like, oh, it's Jimmy. I know Jimmy's good. Jimmy's got a good job. He says his credit's good. But whatever you think is makes Jimmy a good borrower. But when I pull that credit report and I make that phone call with Jimmy, all right, I'm going to try to help you out. Let me see if I can get him on the phone. We try to rush through it and bam. Jimmy, you forgot to tell me about your bankruptcy you had. And that was discharged 1.5 years ago. Jimmy's dead, right? Jimmy can't do anything. Or I've got, a real credit issue that may be erroneous. Maybe there's things on his credit report that aren't valid, but his score is in the 580s and I can't help him. Now, actually, I can help that low now, and I can touch on that too. But the point is, do yourselves a favor, get them pre-approved, whether it's with me or somebody else, before you ever take them to look at a house. It will just make everybody's life a lot easier. I have clients that call and say, hey, I don't want to buy anything for about 6 months. I still got 6 months left on my lease, but I just want to talk to you about the process. And I try to strongly encourage them to pull a credit report because I want to make sure there's nothing on there that's erroneous that they need to fix. Because if they've got time, that's the best scenario because now they can fix those things. Sometimes it's erroneous information that takes 1 or 2 phone calls, it's gone. Actually, a good friend of mine's wife had a collection that once we removed it, it didn't have to get paid off because it was a mistake. Her score jumped to 100 points. 100 points on a credit score will make a difference of more than half a point on an interest rate, which is well over $100 a month on a $200,000 loan. So it's a big difference.
To go ahead and knock out some objection they're going to get, how bad does it hurt their credit to have their score pulled?
If it's bad, it's still going to be bad. And if it's good, it's not going to change it. So people think, oh, I don't want a credit pull. It's going to ding my score. It's not. Now, if you talk to 5 mortgage companies and have your credit pulled, which is a terrible idea. And I know some of you, if we go back a long time ago, everybody thought you had to hand out 3 referrals or 3 cards, or you do not have to do that. That is not a rule. That is not a real estate rule. You want to do that personally because you have 2 or 3 people you like. If you like me and you like another lender, hey, give them both our numbers. No big deal. Just say, hey, here's 2 people I think are good. And they may call us both, they may not. That's absolutely fine. But the problem is if they go to 5 different mortgage companies, that's going to be a drop in the score. Okay. Now, technically, if you do it within a certain window, it doesn't change it too much. What really hurts a client is if they go to Best Buy and finance a TV, they go to Target, they go to Zales and buy a ring and finance it. They go to Rooms to Go and buy a couch and finance it. And then I do a credit pull. because it's not 3 or 4 mortgage pulls where we know they're not doing 3 or 4 mortgages, it's 3 or 4 new debts that are brand new debts. That is going to drop a credit score more than anything else. So first things we do is counsel people to, let me pull your credit, let's see what's on there, and then don't do anything to change it or mess it up. But overall, just me pulling a credit report in general is not going to affect their score. Now, I will tell you, it will never be what Credit Karma says it is. I do not like Credit Karma. I do not know Credit Karma's scoring model. I wish they didn't exist, because 98% of the clients that call me and tell me what Credit Karma says their credit score was, when I pull it, it's 20 to 80 points lower. Almost every single time. I've had maybe 1 or 2 that it's actually been higher, but it's very, very rare.
So you guys have a Zestimate too, then? That's your Zestimate.
Yeah. Zillow's awesome.
Yeah.
So that's that on credit. Did that answer your question, Ryan?
Yes, thank you.
Okay. Platinum pre-approval. So again, it's important to get clients pre-approved, whether it's with me or somebody else, before you do anything else. We can take a pre-approval. I've been doing this since 2004. I can talk to clients in a 10-15 minute pre-qual conversation. That's my first step. My preference is that you say, hey, Tom, I got a client that wants to get pre-approved. Here's their name and number. Here's when they're available. Or I gave them your number. They're ready to go. They're going to call you later today. Either of those work, as long as it's there should be a little bit of an urgency for that client, of course, from you to do that. But once I get a phone call and I start talking to that client, my preference is to talk to them first, answer all their questions, especially first-time home buyers. I love first-time home buyers. I love educating them on the process, what to expect. They're nervous, they're scared, they've never done it before, they don't know what's going to happen. So I take a lot of extra time to do that. But after that initial phone call, I'll almost always direct them to my website so they can do a secure application. My website's real easy. It's my name, tomweinard.com. You guys may have really gung-ho clients, especially most of those in the millennial category. They're techies. They're going to jump on I get apps all the time. I have no idea who it is, because you or somebody told them, hey, go to Tom's website if you want to do an app, or call him. They'll do the app first, which is fine too. I'm still going to have that phone conversation. But the result of the conversation is I learn what I need to learn about the money they have to put down, whether they have to get a gift or not, whether they have enough money to put down to do what they want to do, what their income is, what their debts are, what their credit looks like, what they would like to buy, what they want their payment to be. I find out all of that information. If at this point in my career, if it's a senior VP of sales that's been in business for 20 years and has a base salary of $200,000 and has bought 2 homes before and has $150,000 in the bank, and as you know, I know that person is 99% likely to be a very good borrower. I may not have to do as much to pre-approve them, but the minimum that I will do on every single client is pull a credit report. I will never, ever issue a pre-approval without a credit report, because I do not want surprises. I hate them. And I will collect income docs as needed. We actually collect income and asset dots up front more than we ever did. I'm sure you guys have heard the term buyers are liars. I don't like that term. I kind of like to think that, I want to get to know my buyers and like them, but they're not always as forthcoming. I had a conversation with a young lady yesterday that is trying to refinance out of a Wells Fargo loan because she's claiming they put her in the CARES Act by mistake. They started foreclosure. She had to defend it, but the foreclosure didn't happen. My real estate attorney friend just looked it up, and she's not telling me the truth. I literally just saw the email from him flash across my screen. So when it comes to pre-approval, I will gather the necessary documents I need so that I can be very confident in telling you, go spend your time taking that person out to look at houses. I don't want you going out there if I don't think they can do it. I may call you back and say, look, Susie's got some issues she's got to clean up. I think it's going to take 60 to 90 days. I'm going to tell her exactly what to do. If it's cleaning up credit, saving money, trying to get a gift from mom and dad, whatever it might be, I'm going to let you know that up front that, hey, this person's probably on hold for a while. When they're ready, I'm going to call you right away and say, she's ready. Okay. Now, to take it a step further, if it is a self-employed borrower, as almost all of you are as realtors, I'm going to ask for your tax returns the last 2 years because you write things off, right? Hopefully you all take advantage of the tax laws and write things off. That means those of you that bring in $100,000 in commission over the year, on paper, you don't make $100,000, do you? You write off your mileage, you write off your advertising. So I have to go look at those tax returns and see what is the actual qualifying income. I'll always take that extra step on self-employed borrowers, and I'll always also get whatever documentation I need to be able to be confident. Then I'll say, look, they're pre-approved, you're ready to go, okay? If we want to take it a step further, I will gather all their docs that I need for an underwrite as if they were under contract. We'll give it to an underwriter. It's called a platinum pre-approval, and that loan will actually get underwritten. Now we can go to a potential seller and say, look, not only is my client pre-approved, but they've been underwritten through WaterStone's platinum pre-approval process. And that is an extra step in the process. So it's not, you know, you guys are always worried when you have listings that, yeah, they're pre-approved, but until that underwriter or that lender calls me and says, hey, the underwriter reviewed the file and we're good, you're a little bit nervous about it, right? I mean, to be honest, you should be a little bit at least until you know that part is done. So that extra step can help a lot in presenting an offer. Tammy?
Yeah. So is that considered the DU? Like initially the lender runs
Good
it through
question.
Okay.
Good question. Okay, so DU and LP. So in case you guys don't know what that is, everybody knows who Fannie Mae and Freddie Mac is. They each have automated underwriting systems, or AUS, that we run on every client. I will do that regardless of that. I will do that before they're pre-approved. In addition to pulling a credit report, I should have mentioned that. I will never give you a pre-approval without an approved AUS. And all that is, it's a system that we have every bit of data in the loan except for a property address. And we run it through that automated underwriting system, and it gives me an approval or an ineligible or a denial. Until I get that approval, I cannot give you a pre-approval letter. But once I have that, then we're good to go. That's what DU and LP are. Those are the automated underwriting systems for Fannie and Freddie. So that is a step I will take that will happen before they're pre-approved as well. But that's still not the platinum pre-approval. That's just, I do more than most lenders do up front in terms of gathering docs, pulling credit, and an AUS. That's the minimum that I do. The platinum pre-approval is the extra step of actually getting that client underwritten for a certain purchase price and loan amount. Malvis?
Yes, sir. I have a question in that regard. So, you know, in the contract, there's usually a time frame for, you know, give the lender 30 days for a loan approval, right? What is the difference between that type of loan approval and conditional approval? The reason why I ask is because sometimes, you know, the file gets up until underwriting, and then underwriting says, okay, you're a certain amount of conditions. Is that loan approval that the contract refers to the same as the conditional approving?
Yes. Yes, that conditional approval satisfies the contract. Now, if there are conditions that we cannot overcome, if for whatever reason, and again, that's kind of, I shouldn't say that, because technically, if the underwriter can't issue a conditional approval, they're going to suspend the file. If there's not enough income, if you know, somebody makes a mistake, and I will be the first to admit I've made mistakes in calculating income. Thankfully, almost always I have a solution and I can fix it, but it happens. So those files will actually get suspended. Once it's conditionally approved, as long as we look at those conditions and it's, hey, we don't have the appraisal back, we just need one more bank statement, we haven't verified employment written yet from the client, but we've done, or the employer, it's verbal. Those are things that are, that loan's ready to go. We just got to get 3 or 4 documents in or do some things on our end. And then when we resubmit it, hopefully the second resubmission, it becomes clear to close. But the conditional approval does satisfy your contract timeframe.
Okay, so that's, for example, if in a contract, you as a lender receive an executed contract with 30 days of loan approval, and within those 30 days, you have those conditions met, and the listing agents come back to the buyer's agent and said, hey, is your client's loan have been approved? We can say yes.
Yes, yes, it does not have to be fully approved to satisfy that part of the contract. It just has to be conditionally approved. That's what everybody wants. That's what, as a listing agent, you should want from the lender through the other agent. You should want to know that it's conditionally approved. I make update calls on Tuesdays to both sides of the transaction to let them know that. And once I do that, almost every agent on the listing side says, great, thank you. Now, some of them want a letter. We can provide that. If you get a listing agent, or you as a listing agent ever want, hey, I would like to know that it is, I want to see it on paper. Very easy for us and any lender to provide that letter.
I recently came up on the MLS, and there was actually on a listing, I was looking for the buyer, and the listing agent actually had an addendum already written in the MLS that it said that the buyer to provide lender's loan approval within 20 days of contract.
Conditional approval letter, yeah. Yeah, you can make the short time frame shorter. So I don't think we necessarily underwrite faster than everybody in the industry, but we do underwrite pretty quickly. Up until these last few months, which have gotten pretty nuts, even with the low inventory, we're very, very busy, especially because we're still doing a lot of refis. Our normal underwriting term time from the time it was submitted to underwriting was 48 hours. Right now, we're somewhere between 3 and 5 days. So if I get a contract in on a Monday, I get it disclosed to the client. They e-sign everything on Tuesday. They get all the docs in by Wednesday. My loan partner, Chris, takes a look at the file for a day or two. By the end of that week, that loan's probably submitted to underwriting and the appraisal's been ordered. So within, and so if we underwrite in 3 or 4, 5 days, less than 2 weeks from the time I got that contract, I've got a conditional approval. Okay, that's the normal time frame. Okay, now, if I get a contract on Monday and I disclose it and the buyer doesn't e-sign it, like the one I disclosed last Tuesday, and it's an unmarried couple, and on Saturday, after 2 reminders, she e-signed, but as of this morning, he still has not e-signed. I'm now a week and a day behind because of that client delaying e-signing his loan application. So he's going to get another reminder today. But those are the things that slow us down. It's always the buyer, guys. I shouldn't say that. It's 98.2% the buyer that causes delays on a transaction. Now, it's my job to make sure that buyer has the right expectations, but I can't make them sit down at their computer and e-sign a document if they just keep forgetting to do it or are too lazy to do it. So we do as much as we can to make it happen as fast as we can. When it becomes conditionally approved, let's say Chris has to do 3 or 4 things internally. We need 3 things from the client. If the client takes 5 days to get me those 3 things, I can't resubmit it back to underwriting for a clear to close. So we impress upon them the urgency of doing it, but that doesn't always happen.
How often do you get the conditional loan approval and the deal doesn't close? Because they would lose their escrow at that point. Correct?
It depends on what the reason is. There's a lot of different things that go into that. If they're conditionally approved, there shouldn't be any reason for it to fall apart unless there are conditions that can't be met, but that's very, very rare. If the buyer all of a sudden spends the money they had, that becomes a problem, right? But there's a lot of ways, and I can't spend too much more time, I'm sorry, with you guys, but we can talk, Tammy, one-on-one about that if you like, or I can get some answers to Ryan on that. But it's pretty rare that the client is going to lose their money. I've had so few of those that have happened that as long as we get to that point, if we've done what we're supposed to do up front, it's usually fine. Really quickly before I go on appraisals, it's really more of a individual borrower situation, but there's almost always a way to make it work depending on how much the buyer has in extra funds. That's the key. If the buyer has the additional money to bring to closing, and that's a conversation that you and I and the borrower need to have in the very beginning to say, okay, you only have 5% down and you have no extra money. You're getting a gift from your mom. You barely have enough reserves to make this loan work. You guys as realtors should not write a contract for that client without an appraisal contingency. Okay. The one that I just had this week, 400,000, 410 purchase, appraisal at 398.5. Not terribly low, but low. But the borrower was putting down almost 30%. It didn't matter in one bit. All I did was change the numbers, and instead of a 70% loan to value, the client had a 72% loan to value. The client's bringing the same amount of money to closing. They're buying it at full price. We all understand appraisals are kind of wacky right now. So that client, I'll tell you up front, you'd be okay without an appraisal contingency. But if you're going to do any of those, I highly recommend you put a cap on it and talk to me or your lender about that cap, right? So if the borrower has an extra 20 grand, let's don't blanket say we don't care where the appraisal comes in. Let's say on a $400,000 purchase, buyer agrees to buy the house that appraises for at least 380. Whatever we know that client has that they're comfortable spending, that's what we want to do. Okay. And again, I'm sorry I have to rush, guys. Just have another appointment to do. Really appreciate your time. Ryan can get you my contact info. Again, my website, tomweinard.com, has all my contact info. You want to call me or email me one-on-one, talk to you guys. All right.
All right. Hey, thanks, Tom. Thanks for coming in. Best of luck to you in your appointment. And
Thank you.
You guys, I hope you learned something from Tom. That's really good information. Thanks, Tom. We'll have you back on soon.
Thank you, brother. See you guys soon.
See you guys. All right. Do you guys have any comments or questions about that stuff? There's some things I want to hit on. One of them was the, he's right about the lenders. You guys have certain lending partners I'm sure you like working with, people who actually get the deal closed. That is wonderful. Use those people, and you don't need to give them 3 of those. What we're talking about is inspectors, people like that. That's where liability happens. Give them at least 3 inspectors and tell them they can Google the rest of them in the world if they want, and let them go from there. Do not direct them to an inspector. It looks bad if something comes off down the road. It looks like you send them to your cousin who's an inspector, and they just approve all of your stuff and make it look good. And then they're there for 2 weeks and the roof starts leaking again. All right. So there's just all kinds of liability involved in that. Do not direct them to an inspector. Give them 3. If you don't have 3, they're on our vendor list, or Orlando, Tampa, everywhere. We have vendor lists for both of those markets on our paperless pipeline under the reference tab. If you don't know 3, pull them from there. If you want to throw your favorite one in there, do that. If you want to tell them, I send 3, and tell them, and you're welcome to google.com, anything else that you wanted, anybody else in the world, and good luck. Because I do not want them using my best friend who's an inspector, because that comes back to look bad on me. Okay. Just avoids the appearance of impropriety. So I wanted to cover that. Any other questions on that stuff? Lot loans, any of that kind of stuff? Yes.
I have a question. I have a client that's pre-approved for what do you call it's 275, but he's telling me to see a house for, he can go up to about 330, 340, because he says the rest he'll put as cash. So do I have to go through pre-approval again with him?
What do you mean? I would ask him to see proof of funds before I show it, because we're going to need to send a proof of funds and the pre-approval when we buy something.
Or ask the lender, because the lender should know how much cash they have, right?
No, but his criteria changed. He was first at doing 20% down comfortably. I don't know where he's got his money from now. And he says, well, don't see a house for 275. You can go up to 325, 330, and I'll do the extra 40, 50,000.
Okay, well, he needs to talk to a lender who will give him that pre-approval for that, and then it'll be based on if that's all he was approved for, 275. Look, guys, Elon Musk could go get a pre-approval for 275 right now. It doesn't matter how much he could pay. He asked for 275, they'll give him one for 275. Okay.
Okay, so I have to
So-
change that with the lender, right?
Yeah, call the lender and tell them you want that. Well,
Okay.
not you, the client needs to do that.
Yeah, yeah.
Otherwise, and you know how you get the client to do that is to tell them, if you don't do that, you gotta give me a proof of funds showing the difference. Because if you call on Daryl's listing and it's 335, you offer 335 and you give him a pre-approval for 275, Daryl's gonna say, where's the rest of the money, right? So,
So what
you
you're
need to
saying
tell-
is either I should have proof of funds or the lender should rectify the pre-approval. Is that what it is?
if you want him to get an offer accepted, yes. If you
Okay,
just want to
okay.
write a lot of offers, then no.
Okay, are you
whatever you
seeing
want.
a little bit of slowdown in the market, or is it the same way?
We're all seeing a little bit of a slowdown in the market. The ones where you get 10 offers the first day, now you're getting 6. So good
Okay,
luck.
oh,
But
okay.
that doesn't, that's not that helpful though.
Yes, it's
um,
not, it's not.
All right.
Okay, thank you.
And at 335, it's a jungle out there. Lots of buyers
Yeah,
out there.
it is, it is.
All right. Good questions tonight. Anybody else? Somebody else was about to ask something I thought I saw. Yes, Malvis.
Yes, I have questions. In regards of, so if you have a customer that wants to purchase a home and build a pool, and the property has a septic tank in the backyard, what are the items that I will need to find out if in that property a pool can be buildable? Tell me what I'm missing. I already got into Orange County Property Appraiser. I saw that there was a permit that was pulled back in 2005, and there's piping underneath that was like permanent pool piping that was for a pool and a spa that was never built, but their permit was there. I called the sellers, the listing agent, and we called the plumbing company that pulled that permit to see if we can get the diagram for the septic tank. My question is, the septic tank runs vertical in the backyard, and it's in almost an acre lot. And there's space enough in the side of the house to build a pool, but the buyer wants to know if she can build a pool in the middle of the backyard, or if it has to go towards the side of the house. So you know how the drain fields are for the septic tank? Is that what I need to find out, where the drain fields is, in order to identify whether or not a pool needs to be built at?
Okay, if this is really an issue for them, I'd have a septic company come out and talk to them about, the diagram would be helpful. Have a septic company come out and talk to them about moving the septic tank, and then have a pool company come out and talk about where they can build the pool. So it's just a matter of meeting with the vendors and getting estimates on this stuff. Because at some point, I mean, yes, you can do anything that you want to. It's a matter of money. So.
Okay. Other than having a septic company go out and a pool company go out, anything else that we need?
Are you under
No, I think the
contract?
diagram.
Are you under contract?
Not yet, but I've been talking to the listing agent today, and my buyer we're sending an offer tonight, and she's looking for all this information for me. I asked for the survey of the house. I don't know if that would help, but I figure if I can get a survey, a pool company can see the boundaries.
Do
So
you-
you're
okay,
kind of
Malvis.
wasting your time until
Yeah,
you're under
Malvis.
contract.
Malvis, get an inspection period and do this. You don't need to be solving people's problems until you have it under contract.
Okay. Okay, I was
So-
trying to think what I need.
You're
So-
gonna do
so
a
if I-
septic, you're gonna do a septic inspection too. And part of that septic inspection, you could have them outline where the drain field is. And then I would think the pool company would know the stipulations as to distance and all of that based on that information.
Would I need
So
to?
you're gonna
put
need a
something-
longer inspection period to figure all this out.
Okay, and then what, also I needed to figure out if there's anything that I need to put on that offer that would give me enough time to talk to septic company, pool company, home inspector, and things like that.
Inspection period.
Okay. 15 days would be enough to do all those due diligences? Days?
Depends on how hard you're gonna work it. But yeah. you're gonna
I've been
have this-
working on it without being under contract, like I've already called.
Okay, Malvis, is the where the pool goes a deal breaker?
They're worried about where the pool go. They don't want the pool to go to the side.
You'll have a good idea within 15 days if you're diligent about it.
Okay.
All
Okay.
right. You have a septic company come out, you have a pool company come out. Pool companies are in the business of going out and giving estimates. Okay.
Okay.
And they'll probably give you a diagram of where they could build a pool and some kind of look at what their pool would look like within a few days.
Okay.
All right.
Okay. Thank you.
You bet.
Check
But it's-
with the pool company on their time frame though, because I just had a client, they just started their pool and we closed what, back in November, I think?
Yeah, they're
Maybe
backed up.
October. So they're all backed up still. So I would definitely check with the pool company to see what their time frame is.
I'd go ahead and call a pool company right now, Malvis, if you're confident you're gonna send this offer in and you're gonna get it approved. I'd call a pool company right now and have them come out as soon as they can.
Daryl, who is your pool company the client is using?
That's my client. I can't remember. It's been too long ago.
They're called
Okay.
9-month pool. 9-month pool starters.
Probably.
Yep. You get pregnant on the day you call them and you'll have your baby just in time for the pool. There's lots of pool companies out there, guys. You're welcome to look them up or whatever, but I know of some as well. But we'll find you some pool companies. Anybody has a favorite pool company, go ahead and put it in the comments if you mind, at the chat. Any other questions? But Malvis, before we get too worked up about that whole thing, let's get under contract.
Yes, sir. I've been texting with the listing agent since this morning. So yes, we're gonna put it on for today.
Okay, awesome. Any other questions or comments about things? Guys, I really like the pre-approvals, and I've seen it from other companies as well. The very detailed pre-approval I showed you guys in one of our trainings before, where they have all these check marks. They've done everything but put in the property. You guys have seen those before. Does that make you feel good as a listing agent when you see those, where everything has been verified and checked off? And one of them did a really, really, really good one that I saw that had everything checked off. This person was completely pre-approved for this amount, and all they're waiting for was to plug in the property and they were ready to go. And that deal closed perfectly on time. Everything was great. So those look good. They make the seller feel good. Seller doesn't really usually know as much as you guys know, obviously. Makes you feel good that you can present that to the seller. Because guys, what happens when we have one or two or three deals fall apart on the same property? Seller starts to blame us a little bit, don't they? Looks like we're bringing them bad buyers. But you and lenders are so backed up, a lot of times they can get the person done, but not in the time that they say they do. They're all going to come in this training and they're going to tell you, oh, we close people in 25 days. And then what happens when you actually have a deal? We're asking for extensions and looking bad. And in this market, not so much now, it's starting to level out, but in the previous 6 months, sellers have been saying, no, we put it back on the market. It's worth 10 grand more than it was when we signed this deal 45 days ago. Right? So sellers are going to stop looking for ways out like they are now, but it makes us look bad. Yes, someone had a question. Yes, hey, Malvis. Go ahead.
Nina.
Go ahead, Sinai.
I have a quick question, Ryan. One of my clients, they're selling their house and they're looking at an empty lot for construction, and the listing person is giving them. They just need to get a survey. You just go to the county, right? And then you'll get a survey on the property.
You need a surveyor to give you a survey of the property.
No, survey of the property. They need to, suppose it's half an acre. They want to know it's for sure, because you know how people are lying about stuff just because it's selling. So they just want to make sure that, their lot, which they're looking at, they have a definite size of what it is.
Okay,
So
okay. Well, you can get that through the GIS of the county. You can get it online. You can get whatever property appraiser site will give you. You can look at the GIS and it'll give you the.
Okay, so GIS will give you. Okay, great.
Yeah.
Thank you.
Yeah,
This
but
is
I mean, if they need a real survey, that means a real surveyor has to go out there.
Okay, no, that's different. They just want to know that the size, what they're saying is the truth. And so GIS, but this is a Lake County property. Is that?
But Lake County
Where
has a GIS, yeah.
Okay, okay, thank you.
I live in Lake County. We have internet and everything. It's great.
Thank you.
This isn't 2015. We have internet now. Yes.
So going back, Ryan, to pre-qualification letters, seeing things from the point of view of a listing agent. When listing agents receive offers for their listings and we get the pre-qualifications letters, are we allowed to, before we present the offers to the sellers, are we allowed to contact those lenders for the offers that we receive and making sure that their potential buyers have been fully pre-qualified, what type of loan they're using? Are we allowed to do that? And then when we go present those offers to the sellers, say we have spoken to so and so and so, in case that we have pre-approval letters that are not clear enough. Contact the lender at that point in time?
Well, not legally you don't, but yeah, you might as well. And the lender will be happy to tell you, but they're probably going to tell you everything's great because they want the loan. But their letter should say everything that needs to be said, and it should be dated. And so you see that, you know, if this was 4 months ago, then things might have changed. But if they just did it Tuesday and you're taking the offer on Friday, it should be perfectly fine. A lot of them, the really active ones with the good agents, are getting ones designed specifically for your property that match their offer. So if they offer you $395, their letter will say $395, because a lot of lenders, I know we've done it with Tom before, where we say we're offering, all right, I need one for $280 and one for $290, and because we're making 2 offers this weekend, and I don't want to give somebody that I'm offering them $280 one that says $290, and I can't give one that I'm offering $290 the one that says $280 because Daryl's going to be telling me I'm 10 grand short. So you want in a market, especially when there's going to be negotiating, you want letters that match your thing. So you need a responsive lender who's going to make his letters match his or her offers. You know what I mean? So anyway, it should say more than that. If it's outdated or whatever, then you know you've got a half-hearted effort from the agent and or the buyer and or the lender.
If it doesn't specify whether this is for an FHA loan or conventional loan, or
It should say that on the loan. If it doesn't, then I would be a little bit worried. It should say conventional or FHA or VA or whatever it is, and it should say the amount they're putting down, the total amount of the house, the amount they're putting down, total amount financed. Just basic information. It should say that. If it just says, yeah, I met Bob and he seems like he could buy stuff, that's not good.
okay, thank you.
I've never seen one that doesn't specify that stuff, but I'm certain that they're out there. Anyone else have a question? Or Malvis, you're eligible to ask more. It's fine. Anybody have a question? Yes, Stella.
Okay, so how do you handle Harmony lenders? Because I was on a listing side and I got a few offers with Harmony lenders that they just sent me an email saying, yes, I'm willing to give this person this amount of money. But like, how do I verify any of that? Usually it's private people or private, company.
Are they treating it like a cash deal, or they're doing a financing contingency?
Treating like cash deal.
Then it's a cash deal as far as you're concerned. If they put cash on that contract, I don't care if they rob banks and give me the money. They need to show up with the money at closing.
So
They have to show proof of funds.
Yeah, so
right?
the proof of funds will be like that.
I would take that as
letter?
proof of funds. No, yeah, I would take that as proof of funds.
Okay, so I can take that email.
I mean, if you want to take this offer, I'd rather have a cash offer, but I would take that as proof of funds. I would prefer that offer you're describing to a conventional loan or an FHA or a VA, but you know, it depends on the property too.
Yes, I was just a little concerned because obviously it sounded good. It was a cash offer, but the only proof of funds that I had was an email that company sent me, or a letter with no letterhead or something like that. So I'm like, sounds good, but is this legit? Like, how can I make sure this person giving them that cash? Like, how do I confirm that
You could
for
email
the
the
sake of
people.
my sellers.
You could email the people. You could look them up. They had to have a company name of some sort, make sure they're a legitimate company.
Okay.
I actually buy homes like that all the time. I put in cash offers and I use a private lender. And what Ryan said, just contact the private lender or the institutional lender that's a private lender, kind of sort of.
So there,
And
when you
ask them-
submit those offers, you submit a letter from the lender,
I do.
and
I
that will be
submitted
a
a letter
proof of
from,
fund.
and the lender, my lender, it's a private lender. It's a private friend of mine, actually. And he writes it up as a and he says completely approved. And we can close on this date, and they give the amount, and it's just how it's done with private lenders, pretty much. Just check them out, Google them and do your background check on the private lender and stuff if to qualify them.
They'll lose
Yeah,
their
and-
escrow if they can't close,
Right, and Stella, that's why I want to say it depends on the property. If you're selling something that is going to be, a flip, or it's going to be an investment or something like that. Like, one thing I would look up if in Daryl's situation is I would look up Daryl and see what he owns. You know what I mean? I'm
Yeah.
not kidding. I would look up Daryl's name and see what he owns. If Daryl's been buying and selling properties, obviously he's legitimate. So
Daryl, would you mind sharing the contact for the lender that you use?
No, I'm sorry, it's a private lender. It's a friend of mine.
Okay, I
It's
understand.
all about to do with relationships.
Yes, I
Um,
understand.
But when you Google me, don't just check Orange County, because I only own 2 properties in Orange. All the rest of mine are in Volusia. So,
but even if you just did Orange County, I'd be pretty comfortable that guy already owns 2 properties in Orange County. That means he's not a
Yes.
flake, right?
correct. And I've sold multi, so probably 5 or 6 or 7 will come up. So.
And you know what? Also, Stella, does the person have an agent?
They did.
Okay, call the agent and say, what else does this owner own? Say, my seller, always, it might be your suspicion, but always put it off on your seller. My seller is, the only concern they have is the capability of this buyer. Does this buyer own any other properties you can tell me about that I don't see in the property appraisers? Sure.
Okay.
All right, don't be afraid to ask questions, guys. I mean, treat it like it was your own. What would you do if somebody's sniffing around? I mean, right now in this market, a lot of times we're just throwing offers off because we don't need them. We're going to get more, but this is a good time to prepare yourself for when every offer comes in is going to look beautiful, which, this market goes up and down. It'll be a buyer's market one day. We'll be begging people to, and you guys are buyer's agents, you'll be treated like gold again. And those builders will be coming to our office with cupcakes again and everything else, instead of giving you $4 for selling a house. So this thing will turn around. But in the meantime, practice due diligence on everything that you do. I mean, if you want to know what, Susie Smith owns, look her up, but don't just do all the work yourself. Ask the agent. That's their job to know too. Oh yeah, Susie's bought 18 properties with me. Here's some of the addresses. Right? If they want to sell the property, they're going to comply with whatever you ask. So lean on them. It's not all on you. And always blame
Thank
things
you.
on your broker or on your client. So it's tell them your seller is interested in other properties they've owned to make sure that they're legitimate. The other agent will know what to do. Or the other agent may say, I don't know, this guy contacted me off the internet and I'm scared to meet him in person, which, there's different results you could get from that. Yes, any other questions?
Question?
Yes. Hey, Malvis.
Sorry. So I'm sorry I asked too many questions, but
I didn't know you were here. Yeah, go ahead.
you're funny. So I sold a property with a septic tank in the past, and the buyer was told by the septic company that to inspect the septic tank, they had to pump it. And to be able to do, whatever, they put a camera inside or whatever, and it cost the buyer like $300 to pump the
That's
tank.
cheap. That's cheap.
That's
It's about
cheap.
5 something or 6 now.
To pump it?
To do a septic inspection, I think you're about 450 to 600.
Okay, that was my question. Is it true that it has to be pumped to be inspected? What else they inspect other than sticking their camera or whatever they do inside? Like how?
I don't think the camera would be effective with you know,
with poo-poo
500
in it.
pounds 500 pounds of excrement.
But
So
but if they pumped it recently, would they? Like, I guess I'm not asking my question right. From what time to what time how recent would the tank needed to be pumped in order to be inspected?
I think you're asking the right question to the wrong people. Because I don't think we know a lot. I can't speak for everyone here about how long a septic tank needs to be pumped before I can get a camera to work well down there. I don't have any-
Yes.
That'd be a good question for a septic company.
Okay.
All right, or anyone's welcome to chime in if they know the answer. Abby, you got anything on that?
No, you just need, you'll learn by educating yourself by calling these septic companies and asking them these questions. And then you become very knowledgeable after you do that, you
Do you
know?
have, do you have knowledge that they recently pumped their septic tank? Is that what you're asking?
They don't remember. So
Then probably not recent enough. I'll go ahead and answer that one if they don't remember.
I've got a few things.
because
Septic
Mike.
inspections, septic people usually will request that homeowners have their septic system checked out 1 to 3 years. When they come out and do an inspection, the first thing they do is what's called a hydraulic test. They'll pour water, they'll bring out a hose and they'll dump a bunch of water in there, no matter what the status is of the septic tank itself is. And then they watch to see it over a given period of time if that water drops off. And that's what they're looking for, is the water level to drop after they fill the tank. Once they do that test, then they'll go out and pump it out completely. So they've got to do an observation of what type of tank system it is, how big it is, does it qualify for the size of the property, how many people living, stuff like that. So yeah, there's a process they go through, and yeah, they are running in the $550 price range right now to get that done properly.
wow, okay.
I love it.
And
Thank
they
you,
will
Mike.
also verify where the drain field is as well. If you want, they can go around, they can determine where that is.
Okay, yes, thank you very much. And I will Google, but does anybody in this call has their favorite septic tank company that they have worked with before? That have done that type of job?
They all do. Brownies they're out there all over the place. Most
Okay.
of them do the same type of a process for inspection,
Okay.
yes.
Okay,
Brownies requires you to get the seller to sign off on, it's kind of a big rigmarole where a lot of others won't do that.
It's a
You have to-
permission, yeah, it's a permission to, from the homeowner to enter the property, because those trucks are huge and
Mhm.
they could cause damage. So they want to get the property owner's permission to get on the property and do that. Plus digging up the yard, finding the tank. There's what do we call it? Collateral damage sometimes. So yeah,
Mhm.
that's got to be done.
But I think Brownies is the only one that I've run across that requires that. None of the others.
Possible, yeah. Not sure of all the others.
Well, Brownies is a big company. They probably have insurance requirements and stuff that other people don't.
Mhm.
thank you.
Oh, okay, guys. Any other questions? Mike, thanks for your expertise on septic. That is awesome.
No
That is the
problem.
beauty
Thanks.
of an open forum for you guys to share stuff. Thank you. Any other questions or comments?
Ryan, I have a question. I'm dealing with these vacation homes. Is anybody dealing there? They are running a circus. You try to get deposit for your client and they change inventory. Is there anything, anybody's heard about that with Lennar in Champions Gate or any of these? I mean, it's a real circus. You go through the whole thing and your whole thing falls apart right in front of you because of the games they play. So does anybody have any suggestions, or they are dealing with anybody over there? Because this is my first time, so it's horrible.
I don't. So you went to get, you had a contract and you went to get a deposit and.
No,
you
no,
came
what
back
they
with-
tell you is they have WaterStone Eric Cotter. They suggest his name for lender, which my client did go to. He's got pre-approved. a solid client, but this people, they'll tell you, okay, we'll give you the inventory, we'll give you the incentives, which were high before. They were giving 40,000 off the price for the house, but now they're only giving 5,000 to the lender that you use. But when you go through this whole thing, they change the price, the incentive is gone, and you look like a fool in front of your client because, you know, you tell them this is what you're going to be getting, and then they don't get that. And when you talk to there are 3 or 4 salespeople that run the whole show. I mean, I don't know, it's just terrible. And I had a client, 680, he wanted an 8-bedroom, went through the whole thing. Everything fell apart. They will try not to show you inventory. I don't know, maybe they get other people, what they do, but there's nothing ethical. And I was speaking to one of the lenders who's left them, and she says you have to go on their Facebook, Lenars for Champions Gate, and she's saying they are doing this with most of the realtors, and she's saying a lot of them are frustrated. Either they deal with it or just leave it. But you know, sometimes you have a long-term client and that can fall apart because they're taking their time out from their schedule and getting everything done, and everything goes apart. Totally. They tell you some inventory. I had just closed earlier in the year, one of them, they gave them half the size of the pool. And I told my buyers, I said, you want to walk away? They said, of course, we have a buyer ready, let him walk away. And he ended up closing though. So he says, I'll take the pool. They gave him 5,000 off, but does anybody have any clue or suggestion how to go about it? Ryan?
Do I? No, this is the market and this is what's happening. And the same reason that your client closed before after they bullied them and changed the deal is why they're doing it, because everybody's still closing. And they're going to bully you as much as you can, just like we talk about with them, just like they'll be begging you to come back in a couple of years. That's what they do. And
the short-term rentals have always been a totally different world. It's totally different. It's totally different from the regular residential world. You got to really know what you're doing, and you got to know what you're doing. It's very hard to deal with sometimes.
Yeah, but you know what? Even they don't have buyers for $500,000, 800,000 cash. They are not walking around all over the place. But the thing is, the games they play with you, I don't know how they deal, because I've not done, I don't know, there are maybe people that are doing 30 deals with them. I'm just doing 1 or 2. And I'm very, very frustrated because this second thing just fell totally apart. So I just wondered if anybody had suggestions. Thank you.
All right, any other questions or comments? Anything else? Okay, guys, we'll be back on next week. I've got a special presentation either next week or the week after I'm working on for you guys. And otherwise, we'll see you next week. Don't forget, guys, it is September 1st. Some of you guys renew this month. Don't forget to do your renewals. We just had another great August. So that was exciting. You're going to see a natural slowdown in the market as people are back in school and doing all that kind of stuff like they always do when we enter the winter months. Do not be discouraged or anything else. Keep fighting through it. You guys are doing really, really well. And very proud of you, very happy for you. Let me know if you guys have any questions on anything, and we'll be seeing you next week. Thank you all.
Ryan.
Yes. You're welcome. You're welcome. One other announcement. This is, as you guys may know, this is Larry Angel's last week at the office. She'll be gone on Friday. We've hired a wonderful young lady named Kayla. She will be helping you guys. I'll be introducing her to you shortly. But she's very capable, very helpful, and we look forward to working with her. So see you guys. Take care. Have a great week. Bye.
Thank you, Ryan.
You're very welcome. Awesome. Have a great week. Bye, guys.